A sea of red for Asian stocks this morning as China's industrial profits continued to shrink in November, albeit at its lowest pace in almost a year. Property stocks are leading declines as it was reported over the weekend. The Beijing police were investigating Chinese shadow bank Zhongzhi Enterprise Group. The world's second largest economy will release its official factory activity figures for November on Thursday. Meanwhile, Japan's service inflation also surged to a 45-month high. For more on this now, let's get to Jamil Ahmed. He is chief analyst at online trading brokerage at GTC in Dubai. Thank you very much for joining us today. Right, Jamil, once again, China data really pointing to a mixed recovery in markets not really liking this. What's your take on this? What's happening in the world's second largest economy?
Well, Ludovica, firstly, none of this is really a surprise. We've been seeing a slowing down China growth story throughout 2023, and it was in line with expectations based on the Chinese economy entering what was prolonged lockdowns that lasted pretty much 3 years. So it's taken a long time for Chinese economic momentum to start to recover. Sometimes the data suggests that 2024 is going to be much better. Other times the data suggests that 2023 is very much going to be a slow burn. Nonetheless, we do see some signs of some hopes because the PBOC, which is the People's Bank of China, and the Chinese authorities seem to be collaborating more closely when it comes to different factors such as economic momentum, and also in terms of this topic, in terms of improving the stock market sentiment. But at the same time, these issues that you pointed out, they had been long-standing even before COVID started, and there are some structural changes that perhaps are needed. Nonetheless, it's a concern for the world economy because, as you pointed out, China is the second largest world economy. As such, all of the global economies do rely on trade and demand from China. That's why this is weighing on sentiment in financial markets today.
And we saw Japan's service inflation actually surging as well. When do you expect a normalization of the BOJ policy, and how will it happen?
It's finally coming. It could come as early as Q1 2024. But what we are seeing now is what might be the most exciting trade of 2024, because everybody knows that the Bank of Japan and the Japanese government are absolutely fed up with weakness in the yen. At the same point, if you look at the central bank narrative with the Fed, which is the US Central Bank, the Bank of England, the European Central Bank, everybody's looking towards interest rate cuts in 2024. That's likely going to take more time. But at the same point in 2024, we should see the Bank of Japan actually raise interest rates, leading to a differential trade. And we should, as such, see traders flock towards the Japanese yen as a result. So that's an exciting story as we head into Christmas season and 2024.
Jamil Ahmed, thank you very much for your analysis on that. And now let's go to other top business stories from around the world. Black Friday sales have hit a record high in the US, with e-commerce spending reaching $9.8 billion. That's up 7.5% from a year earlier. Analysts say that impulse purchases may have played a role in the sales growth, with $5.3 billion of the online sales coming from mobile shopping. The best-selling categories were electronics, like smart watches and televisions. ByteDance is reportedly cutting hundreds of jobs in its gaming arm and winding down its showpiece brand Nuverse in a major withdrawal from the sector. The TikTok owner's closure comes as the world's largest mobile gaming sector struggles to regain its COVID-era heights during a global downturn. Meanwhile, Alibaba has shut down its quantum computing research lab amid cutbacks at the Chinese e-commerce giant. And the Reserve Bank of Australia has appointed Andrew Horser as the new Deputy Governor. Horser is currently the Director of Markets at the Bank of England, overseeing the design and execution of the balance sheet and financial market operations. The decision to appoint an external candidate is the latest move by the bank to revamp its institution after a review recommended critical changes.